We've got a great speaker here today, Marcello Estevao, the Global Director of the Macroeconomics Trade and Investment Group at the World Bank. He's going to talk about global economic risks, outlook, risks, and policy action, something that we all need to know and understand. That's why I was keen to listen to this talk. Marcello has been in the Fed and Tudor investment, which is very interesting, and as well as in the fund. So he is now in the World Bank as the Global Director of the Macroeconomics Group. And we would look forward to hearing about global economic outlook, risks, and policy actions. I'm very keen to hear that. So over to you, Marcello.
Thanks so much, Nadeem. It's a great pleasure to be here. Just arrived in Pakistan and have been looking forward to this visit for a while. Actually, the team has invited me many times to come. COVID came in the middle, and for 2 years we couldn't travel. So now I'm very happy to be here to talk to you about broad macro issues. Let's just be clear, like I'm going to be talking about the world, maybe making some connections with what's happening in Pakistan. But when it comes to Pakistan, I think I'm here to learn much more than to spout or whatever wisdom I could have on the country. So for me, it's quite exciting to be here for that reason. Maybe in 2-3 minutes, how I see what's happening in the world, and then we can go over the exhibits. So that gives some grounding for our conversation today. I think in my professional life, I haven't seen the world as, and I've been doing this for many decades. I haven't seen the world in such a bad shape as it is right now. And that's because we are coming out of a truly global crisis that was during COVID. And as the world was recovering, we got hit again by this war, this invasion of Ukraine. So these two shocks came on top of economies that were overheated in the core, in particular the US economy. So the world is basically facing a shock of a geopolitical shock. And we could talk a bit about this, but we can talk more about economics. Is facing a withdrawal of broad policy support from the core economies because of their domestic issues. And the countries that are in the receiving end, which are the emerging markets and developing economies, were not in great shape to begin with when COVID started. So I can't remember a crisis that is truly global. I was quite in the middle of the hurricane during the global financial crisis in 2008. I was heading the North American work at the IMF. And yes, it was incredibly busy, but that's because I was heading the North American division, and the crisis in the US was incredibly serious. And it was a time where the IMF was quite involved in discussion with the US authorities, what to do in terms of, bank supervision, regulation, and all that. In general, as you could expect, the US does not pay as much attention to the IMF because it's not a borrower, it's a big economy and all that. That was a time where there was a lot of interaction. So it was a serious crisis, but still we have many countries in other parts of the world that were just marginally affected by it. That's not what we see now. The way that I see is everybody's being affected, every region of the world for different reasons. So let's see if in the presentation that comes up and also in your questions. So let me start with this slide by basically saying that one key issue that is happening right now is that global inflation has risen sharply, and it has been more persistent than expected. If you're following the discussion, again, in the US, of is this inflation transitory or permanent, was quite active debate last year, and that debate basically has transformed into a unanimity that the inflation is much more persistent than people thought. There's still some deviation about how policymakers should behave in face of this inflation persistency, but I would say the diagnostic is still is more of a consensus now. So on the chart on the left, you see food and energy prices, and they include they're basically a core driver of inflationary dynamics. And here we showed multiple countries. I talk a little bit about the US, it's the dark black line, but you see all the countries represented there, all the regions, and European Union, emerging and developing Asia. So I think Pakistan would be with emerging and developing Asia. Is the brown line there. Although, again, that gets helped by the fact that some Eastern Asian countries are not having as much of an inflation problem as countries like Pakistan. It is a bigger deal here. Markets are pricing a more hawkish U.S. monetary policy stance, and that's what you see on the right-hand side. You see 10-year yields, which is the orange line, going to the, not to the roof, to 4%, but is to the roof compared to recent history. And the black line basically shows what markets are expecting for inflation. So you basically just look at inflation index bonds and you back out what's market projected inflation is. The difference between the black and the orange line shows basically a real premium there. So so the shock is both. So there's a real shock. There's real interest rate shock, with the difference between the black line and the orange line in the chart. So in a world like that, you see basically a synchronized response by policymakers. And what you see in the left-hand chart, you see a lot of red bars and orange bars that just show the number of increases in policy rates, where the blue colored bars would show declines in policy rates. As you see, in the last year and a half, the red and the orange bars are much higher than the blue bars. So the world is tightening as a whole. And tighter U.S. financial conditions associated with higher emerging market and developed economy spreads, as you see in the right-hand side. Now, in this situation, financial market sentiment remains quite fragile. And many of the emerging markets see significant foreign exchange depreciation and capital outflows. The chart on the left put Pakistan a bit in perspective here. You see that Pakistan is together with other countries in what let's call the red zone. These are countries that are trading in the stressed situation, and they have EMBI spreads above 1,000 basis points, which basically means it's very hard for Pakistan to roll over its debt in the market now. We can talk a lot about Lebanon and Sri Lanka here. I have been much more involved in those countries than in Pakistan, because those are countries where the crisis really got to a point where there's even social disintegration in those countries. So Pakistan is not there, but it's really a cautionary tale for the country. You see Zambia also being traded quite badly. But as you see in the right-hand chart, Zambia is the ZMW. If you look at the right-hand chart, you see the right-hand chart shows FX movements compared to the beginning of the year, since January. So the bars above zero, they are basically currencies that have appreciated. And as you can see, they are a big minority compared to the other countries on the left that have seen large depreciations. I mentioned Zambia, the ZMW, see a little bit of an appreciation this year. That's because most of the shock in the market happened before Zambia defaulted on its debt in December 2020. And since then has been put forward a reform program with the new government that was installed in August 2021. And it's a quite strong set of reforms. We are supporting those reforms. And the donors and the creditors have been thinking about ways to renegotiating the debt of Zambia. So that's why you see there. You see some of the countries on the right, Russia, yeah, there has been a big appreciation of the rubles. That's basically because Russia can export, but cannot import. So there has been a flurry of foreign exchange to Russia. So you had an appreciation of the currency. And the far right is Angola. We could talk about what's happening there. The interesting thing is BRL. You see Brazil right there. It's the third bar from the right to the left, with some appreciation of the currency. And why that's interesting? Because there's is basically an open capital market, a capital account country, and where there's lots of flows in and outs. And the reason you see an appreciation, because Brazil actually tightened monetary policy way before most countries in the world. and tightened quite aggressively because first was face inflation and saw inflation coming. And you see capital flowing to Brazil now. So it's an example. I would be the last one to be touting how necessarily Brazilian monetary policy and macro policy is done. I'm Brazilian originally, so that's why I'm making this observation. It's not because I'm Brazilian, but if you look, it is really a testament of a central bank that is independent and has done policy in a way that is forward-looking. And Brazil is reaping the benefits of that right now. Whatever noise that you see, and then you see the noise in the dotted brown points there, is because of some political uncertainty. There's presidential elections actually in 4 days, on Sunday. So in any case, so what this chart shows that preparing yourself and actually being active ex ante makes a big difference. So in this, that begs the question, what has happened in the past? So what this chart shows, the red line is what we see right now. So that shows the current cycle, and the shaded green area shows the experience in past recessions. Okay, and the T there, what's called T, is the bottom of the recession, depending on how you measure it. So after some quarters of weakness. Not quite the bottom, but we basically follow is when, I would say it's not quite when it started decelerating, but it's when the recession was clear. So if you look at global GDP growth, global equity price growth, and global consumer confidence, right now are worse than the average in the past. That's why, I mean, this crisis has been quite strong and not like anything I have seen before. Again, if you think of maybe the early 80s in Latin America, you'd see something similar, but that was a Latin America debt crisis, and we could talk about that and how we can make comparison with what's happening right now. Now, in this type of situation, one could ask, and here I'm focused on the U.S. because the U.S. policy making is quite of influence all the financial sector variables, including in other core economies. So we went back and we checked, when enough is enough for the U.S. So when interest rate hikes have been enough. So what this chart shows is change the interest rates and U.S. core CPI, so that excludes food and energy prices, during previous Federal Reserve tightening cycles. So the red bar show core CPI at the beginning of the cycle. So as the U.S. Federal Reserve sees inflation coming or inflation very high and start acting. And then the dark blue bar or black bar shows change in interest rate over the cycle. So as you can see, very often the dark bar is close to the red bar, but this time around there's still quite a way to go on the black bar. So that's the chart on the bars on the very right of this chart, and that basically suggests that there's more tightening coming, and the market is pricing such tightening. I'm going to talk a little bit more about that. So a lot is already priced in the market, but there's still a lot of uncertainty. So I think the world economy still has a lot coming. Let me take a little break before I continue talking about the US and Europe and all that, because I feel like that's a little bit of the contribution of me being here. You know what's happening in your country. So what's the context for the world? Let's talk for the developing world, okay? First, we all enter in this crisis with historically high public and private debt levels. So that's before COVID was getting up. And because of COVID and the need for fiscal activism, that got even worse. So if you look at a chart of total debt in the world, we are at the peak now, at the historical peak ever. We never had as much debt as we have now. That may be slightly different depending on the country grouping, but it's true for advanced economies, it's true for emerging market economies, for low-income countries, for the lower, so countries that are like at Pakistan income level and below, that's not quite true because at the early 2000s, the ratios of public debt to GDP were 100%. That's why we had the Haque initiative, but it's getting there. There's sharply rising inflation, like I mentioned before, in a context of supply chain and energy disruptions. Supply chains have improved significantly, in particular in North America and in Europe, but energy disruptions are still there, in particular in Europe. And I'm going to show a chart to show how worried I am about that. And there's increased opaqueness of bank balance sheets because of forbearance during the pandemic. That's certainly an issue, by the way, for South Asia, a quite important issue for South Asia. I would rank this as a bigger issue for Bangladesh and India than for Pakistan, but it's still banks are also very vulnerable in Pakistan. So given this backdrop, the continued volatile commodity price is a big deal. Pakistan suffers significantly from that. We are a net oil importer, and also food importer now, given that a lot of the agricultural production got disrupted by the floods. In response to inflation pressures, advanced economies, like I said before, tighten monetary policy. There's more coming to the US, which raise domestic and external vulnerabilities and put pressure on central banks in emerging markets to do more. And certainly Pakistan feels this pressure. Financial markets expect the hiking cycle to continue in coming months. I'm going to show some charts on that. The country experiences are diverging, showed a little bit that divergence when you look at the exchange rate fluctuations. But mostly, market sentiment is deteriorating for emerging market and developing economies. There's rising signs of stagflation amidst persistent inflation and concerns of recession, and that's a particular issue for Europe. And, this global synchronous policy tightening, there's some resemblance to 1982. That's why I mentioned the Latin America debt crisis, which was a region that was quite affected by that. We could talk about that resemblance as well in the discussion if you're interested. So there'll be a couple of charts not on the US. I don't know how much you're following what's happening in markets there. Policy uncertainty remains high based on market and Fed projections. You see that on the left chart shows the purple chart shows the FOMC dots. So that's basically what the Monetary Policy Committee and the Federal Reserve has projected for the future. You see the dots there, what each voter has, and the purple line is an average. As you can see, they expect tightening going forward, and for the Fed funds rate to get close to 4.5, a bit above 4.5 in 2023, and then after having a deceleration, have a decline in interest rates. The other lines show what markets are pricing. That's following the pattern, but there's still a space for market rates to go up more to match what Fed is signaling. The right chart shows the US yields, which has spiked significantly. I also mentioned that already in the previous chart. That shows, so the left chart shows short-term rates, the right chart shows longer-term rates, at least 10-year rates. Now, I'm quite concerned about Europe. We all should be. This chart here I borrowed from an OECD presentation that I like very much, and shows the EU and UK gas storage level, how it develops in time. So the blue bars shows storage levels if there's no change in gas consumption compared to the average in 2017, 2021. Given what experts at OECD see for supply of gas, as you can see, that storage is going below the threshold for heightened risk of supply disruptions already at the very beginning of 2023. If there's a cold winter, which is the orange bar, basically there'll be no storage left as 2023 develops. So there's a bars there with the specialists at OECD showing what would happen if there's a 10% reduction in gas consumption. That would keep the situation kind of under control. And that's why European policymakers are trying to invest in very rushed policies to reduce the need for gas imports from Russia. That's a big deal. It's a big deal for Europe. It makes, in some sense, the job of the European Central Bank is easier because the European economy is less in advanced stage in their cycle as the US. So maybe interest rates do not need to be hiked as much as in the US, but the supply shock is much stronger in Europe. And the question is the supply shock going to disrupt significantly inflation expectations in the Eurozone or not? This chart shows that if there's no reduction in gas consumption, the supply shock is going to continue to be major and gas prices are going to continue going very high. And the question is going to affect other prices in the economy and thus force the European Central Bank to hike rates more than the market's price. So it matters for all developing countries what's happening in the US, back on the tightening stance of US monetary policy, is driving asset pricing and risk premium. On the left, you show, I don't need to tell you what's happening to the dollar. The gray line shows the dollar index spot, as you can see, has been trending up since mid-2021. We do not see necessarily, there has been some plateauing, but I think the pressure would be for that dollar index to continue to go up as markets maybe continue repricing the need for higher interest rates in the US. The recent inflation release in the US haven't been very favorable. So, if anything, interest rates are going to continue going up. The right-hand side shows US financial conditions. And the reason I keep talking about the US here is because you look at the EMBI spreads, which affect Pakistani spreads, how much it costs for Pakistan to roll its debt, they're quite correlated. So in many ways, I always joke that we should all be looking at US labor market reports and US consumer price reports, no matter where you live in the world, because it does affect you here, affects you in the streets. There may be some divergence on US and European CPI. That's what the left-hand chart shows. As you can see, the US, you begin seeing signs of reductions there, in particular in the goods sector, less on the service side. Where in Europe, again, because of this shock, the energy shock, it may be more permanent. I think that's going to be a more resilient inflation number, although again, not necessarily related to overheated economy. The US economy is quite overheated. So the US needs, I think it's my personal opinion, needs to produce a little recession at least to bring the inflation down. And that hasn't really happened. Labor market is still pretty strong in the US, and the unemployment rate is 3.5, lowest in 50 years. Anyway, the right-hand chart shows more of the implications for emerging markets inflation. I'm going to go a bit faster because the themes are going to be similar, and I want to have more of a discussion. The stress in financial markets are increasing. You see South Asia is on the right, is the right bar there. That shows EMBI spreads increasing. The chart shows EMBI spreads increase across all regions, with multiple countries facing market access issues. But if you look at the chart for October 2022, so Pakistan is there, you see this huge premium. So it's quite serious compared to other regions. You see very little in East Asia and Pacific, a little bit on Europe and Central Asia, which is remarkable given the wars there. Much less in Latin America, but a lot in South Asia. There's an increasing share of high yield bonds now trading distressed territory in emerging markets. 60% of EM in high yield Asia is distressed. So a lot of that is South Asia. The increase in government debt has been widespread, but it's particularly acute in some emerging market developing countries. I was looking at this chart that my team sent to me yesterday night, so I put in the presentation this morning. I do not see Pakistan there. Maybe my eyes are not great. So if someone can spot Pakistan, I don't think it's there. But Pakistan will be there also with quite high government debt. So would be close to the right hand side. I think Pakistan debt now is, the team may tell me, is probably close to 80% of GDP. So anyway, and yeah,
And we don't
and
know how much is it. So
exactly. No, we could talk for hours. A lot of my day job is talk about debt transparency, by the way. Here I'm using more macro, but anyway, we can talk about
sure.
debt policy more specifically. The increase in government debt has been widespread again, but particularly acute in some emerging market developing economies. So these are the countries that are above the 45-degree line. The horizontal axis show the average for 2012 to 2021, average general government debt, and in the vertical axis show 2022 data. As you can see, most countries are above. Just a different way to show the rapid accumulation of debt. My eyes here, I'm sure Pakistan is there, but anyway, this was done more generally for, I should have asked them to put a big red ball there. This one has a big red on Pakistan on the right. That's basically, we create measures of financial and fiscal risk assessment. So we basically go over all the financial sector variables and fiscal variables, and we create indexes that summarizes the situation. As you see, Pakistan is in the right-hand quadrant there, with elevated fiscal risk and financial risk, together with the Ukraine, Sri Lanka, Ghana, El Salvador, Tunisia, Ecuador. So that those group of countries are quite concerning. And then you have countries that you are very concerned that for some reason our indexes do not show like excessive fiscal risk, like Argentina, Venezuela.
Financial risk index measure?
Basically, we look at EMBI spreads, so market spreads. We look at depreciation of the currency, and I think I actually need to check.
Banking sector.
I think there may be some banking sector quality of the balance sheet there as well. But what's really moving this thing, so if I do this chart, say every 3 months, the most movements happen because of EMBI spreads. So just to finalize, so what's the emerging message of this picture? We do not see a surge in crisis events. So again, now let me be a little bit like, not even the glass is half full. The glass is a tenth full. There's a broad-based rise in macro-financial risks related to muddling through strategy in many emerging market developing economies. But it's not like we see a lot of Sri Lankans happen. Okay, but we are quite concerned in particular about the countries in red that I just showed, and Pakistan is one of them. We're quite concerned about Pakistan. But for the world to really face a major crisis, so thinking now as a global macro person, we need like the huge emerging markets to begin going down, and we haven't seen that. If anything, we see quite a lot of resilience in some of this market. Again, back in Latin America, certainly in Latin America. If you think about what happened in other periods, 30 years ago, 40 years ago, that whole continent would have been down by now. But it hasn't, because there was a set of reforms done in the 80s, 90s, and 2000s that deepen local markets. A lot of the debt issued is in local market currency. So you have very little external debt in some of those large economies. Argentina is an exception, Venezuela is an exception. But you do see, for instance, in the case of Brazil, it's a very large emerging market. 95% of its debt is in domestic currency. And there is a fiscal problem in the country, but markets are not pricing in at crisis level with reason. Turkey is a country that we are very concerned about. Somehow the country is still afloat, even though we do not quite see eye to eye with the way they are doing monetary policy there. So again, it's a quite dark outlook. We are in a bad shape in the world, but at the same time, I cannot claim that there is a worldwide debt crisis. What I see is particular countries going through a debt crisis, and there are numerous countries, but I haven't seen like a contagion or that type of thing. The bank sovereign nexus is tighter, but so far no financial stability or asset market dislocation, emerging market in developing economies. But that stress could strain that type of situation. As I said, now turning to Pakistan, banks here have a higher share of their balance sheet in public sector debt. So if there is a crisis, a public sector crisis, that's going to affect the financial sector very deeply, and that can be a multiplier of such a crisis. So it is a cause of concern for Pakistan. Many of the buffers are depleted everywhere, but I just mentioned deeper domestic debt markets in large emerging markets made a big difference now, say, compared to the 80s. There is some selective bilateral support, which is important, say, for the Gulf countries, and proactive monetary policy tightening have helped. I think the Bank of Pakistan needs to continue doing that. There's loss of market access because of key drivers of risks, especially for commodity importers like Pakistan, which also has high debt. We see a lot of procyclical fiscal policy and exposure to advanced economies, and that's not going to end. That exposure, if anything, is going to get worse. Central banks are struggling to stay ahead of the curve in some emerging markets, and I gave the example of Brazil just because it tells a nice story. There are not many countries in that situation, so countries are they're playing catch up. So what this means is there will be more depreciation, there'll be more tightening, and that's important to restrain depreciation of the currencies, which affect inflation and well-being. And this is always aggravating fiscal vulnerabilities, also through pressure on state-owned enterprise in sensitive sectors, and also social protection system. The biggest challenge here in Pakistan is exactly how to do fiscal consolidation while you just have this major flooding, so I'm very aware of the problem, but the macro problem does not go away because reality is harsh. We are worried about data gaps in financial sector and contingent liabilities. Not quite sure how much of a problem it is for Pakistan. It's certainly a problem for some of your neighbors in other countries. Financial repression is evident in various forms, with negative real interest rates, state-owned banks financing state-owned enterprises, moral suasion, direct lending. These are short-term things that countries do, but they can be quite bad in the long term. Anyway, major downside risks to the debt outlook. And I would like to listen to you and know more about how you see the situation in Pakistan. Nadeem just mentioned maybe contingent liabilities of some uncertainty about debt pressures in the country. It'd be great to know more about that. Certainly, I see a lot of rollover risks of both domestic and international debt for Pakistan, and in particular, in light of the new spending needed for disasters and adaptation to climate change. So let me stop here. Sorry for being a bit lengthy. We don't need to talk about that now, but I just thought, it's nice to talk about the rest of the world for a while. So I'm very happy to have a meeting that's just about the rest of the world. But for me to learn more, it would be great to talk a little bit about Pakistan, and here I would like to listen more than speak. Thanks.
Sure, we'll do that. So folks, your question. But before we go to your questions, let me ask Marcello a couple of things. A very nice overview of the global economy. But Marcello, a couple of things. You haven't talked about growth at all. And being in Pakistan, we're an emerging economy with a very young population. We're deeply concerned about growth. I'm glad to see that the World Bank technology is failing too. This happens to us all the time. So I'm glad to see that the World Bank, World Bank is competing with us. Okay, anyways, folks, what I was asking Marcello was that he hasn't talked about growth. And given the fact that we've got a very young population, we are concerned about growth. And I remember in the past, when the US had a recession, China or somebody else would take over as the growth engine of the world. Now, China is also in trouble. So what about the growth engine? Are we going to all have a global combined recession? Is there going to be any asymmetry in growth performance or not? So that's one question. Please go ahead, and I'll ask you another one.
Yeah. No, that's a great question. I mean, when I thought about what to present here, I put my hat, like that's what I said. Let me put my hat almost like it didn't work at all in some sense. Let's talk about macro, about the cycle, because I think these are really pressing questions. And what to do right now, there's a flood. Now, if you look a bit more ahead, so let's talk about growth, say next year, and then we can talk in the future. I'm quite concerned about engines of growth for the world. If the pressures on inflation, certainly in the US, but also in Europe, continues happening. The US Federal Reserve will continue tightening quite severely. And there's no question about their determination. They own the mistake of not having tightened earlier, and they're going to continue doing it. So in our forecast right now, we do not quite have a recession, but it's hard for official institution to forecast a recession. The markets are forecasting a shallow recession next year in the US. I think the first half of 2023, either or the middle of the year. Anyway, they are now China. So there will be no impulse from the US. The level of activity is quite high, so it's not a recession that get particularly concerned because unemployment rate is very low in the US. But in terms of impulse, is subtracting. Europe is certainly going into a recession, it seems to me. I mean, I cannot see how we can avoid that, given the supply shock that they are having. In China, as you know, this year is going to probably be the weakest growth year in the recent history for China. We have a forecast of about 3% growth for China, which is very low. So all this is. But next year, our main forecast is some rebound as COVID gets more under control. So we have about 4%, 4.5% for China next year. So that's very short term. But what it means that for next year is that probably, in terms of impulse for the rest of the world, is going to continue to be quite weak. So I think Pakistan should not be expecting a big impulse on demand from the outside because of what's happening. Now, to talk about a world recession depends on how you define, because the base growth for China is high and such a big economy. So when you average the things out, you're not going to get a negative for the world. But it's going to be pretty weak. And if the shocks on inflation continue coming and the markets are wrong about the US, then you can have a higher interest rate, there'll be lower growth, and then you could have a recession in terms of per capita growth for the world. So 2023 will be a hard year. That will be my forecast. In the long term, I expect, of course, these things to disappear. China is still catching up. China is still a high middle income country, but it's still a middle income country in terms of income per capita. And there's a lot of catching up to do. And I think that will benefit the world in the long term. Now, the question there, and the US economy should continue growing at between 2 and 3% in equilibrium for the next many years. So there'll be impulse in the long term to Pakistan. I'm not that negative. Now, the strength of how the Pakistanese economy reacts to that impulse is going to depend on domestic reforms, or how open Pakistan will be for these shocks. So how this impulse is going to be allocated within the economy. So there is a whole agenda for the country of structural reforms, on how to improve the function of the economy, of lowering the special subsidies, and all that you know better than I do, and I know how hard it is to implement those reforms. But anyway, I think next year is still going to be a relatively dark year.
Okay, the second question that I'd like to raise is, first of all, let me also say that the Najy thesis, which got him the Nobel Prize, kind of now stands in question. But let's go on to another question. Inflation. How much of it is supply shock and how much of it is monetary driven? I mean, that question has not been asked. And how much of it is driven by the sanctions policy of the US? So are we driving inflation through sanctions and through supply shocks and then correcting through interest rates? Is that a possibility you guys have considered or not? I haven't seen that in the WEO as well as in WOW. So why are you guys ignoring that?
Yeah, I would say the answer to that is depending on the country. So in the case of the US, there's a clear demand shock there. So again, the economy is overheated, you need to hike rates. There's no question there. For countries like Pakistan, you need to hike rates not because of the source of the shock can be either supply or demand, but you need to hike rates because you need to basically support the currency. So that's basically the anchor in the neck of developing economies, that you are fragile when external financial situations tighten.
That I buy.
So-
What about Europe and Japan? Why should
Yeah.
Europe and Japan tighten so much, given the fact that it's a supply shock driven from sanctions?
Yeah, in the case of Europe, there is a need to increase interest rates because part of the inflation shock in Europe is showing up in services as well. I agree with you that it's less. That's why I said I expect less of an increase in interest rates in Europe, because a lot of the concern is through the supply shock from gas, basically. But the European Central Bank is going to be paying attention. If that affects inflation expectations, they will hike more. So it's all about the supply shock is the initial shock. So what standard monetary policy theory would say, you basically accommodate, you do not raise rates. But if that affects overall price levels through the expectations, then you hike rates. Now, Japan is not hiking. So Japan is way behind in this cycle. The Japanese economy is a bit harder sometimes to interpret, because I do find that the policymakers there tend to be more conservative than they need to be. So one question could be why the Japanese authorities could behave in a particular way is different from what I think they should do. So for decades, the Japanese authorities are trying to produce inflation in the country. And once I joked with the president of the central bank there, that was 10 years ago. Oh, I know how to solve that. He just hired a Venezuelan central banker, like, oh, an Argentino. I mean, in a second you get inflation. And then he laughed politely and like that. But it's like, it's you need to commit to produce inflation. So now we begin to see inflation rising in Japan. So they got what they want. So they should commit to it and not hike rates. That's my point on Japan. Now, that's going to have some limit. The yen has been depreciating significantly, and that's creating some concern. But again, I mean, you have been trying to do this for 30 years. You got it. So you should be more accommodative. That's my personal opinion on Japan. Is this going to happen? I don't know.
How about Latin America? Latin America always seems to go in its own direction, causing more inflation. Is it different this time?
No, I think Latin America is following what's happening in the world. The difference is that several of the central banks there have been more active. So you do see inflation pressures in Latin America. The difference vis-a-vis, say, the 80s and the 90s, like I said, is that now we have, if basically all the big countries, there are inflation targeters, exchange rate is flexible, and some were proactive before, and some, I just mean Brazil basically was quite proactive. You see inflation begin coming down in Brazil. Inflation now, the number was just released yesterday, 7.8% a year. So
and what's the real interest rate like in Brazil?
Real interest rate is positive. The policy rate was just yesterday announced to be constant at 13.25. So it's a peak of interest rates for the recent history. So, and the central bank is going to keep rates fixed for the foreseeable future till they see inflation converging back to the average of the target band, which is 3.5%. So 7.8 is still above 3.5, but the inflation hit 11% in the country. So now inflation in Brazil is below inflation in Europe and inflation in the US. Now, there are other countries like Colombia and Chile. What you see is the central bank being behind the curve. So the central bank is they are catching up to, and that's why you see, if I can bring back the chart, but if you look at the chart of exchange rate depreciation, one of the currencies that depreciated the most this year was the Colombian peso and the Chilean peso, two of the currencies that depreciated the most, because they were behind the curve. So they're playing catch up. Now, I do not have any doubt that they are going to be successful. They are going to create some, economic activity is going to slow down. But these are small economies in Brazil, and they are quite open to trade and to capital flows. So I think central banks are going to correct this situation.
So how important is it to have a positive real interest rate?
Because in Pakistan now, our interest rate is sharply negative. So if we correct it to go to for a real interest rate, we'll have to go well above 20. And the fund has also shied away from asking for an interest rate correction. We are sitting at 15. With inflation now, I think I'm trying to work it out in my head, I don't think I can. But it should be average annual inflation of the year end should be well above 20.
Yeah, that's a forecast for next year. I think it's 23% or something like that.
So how important is it for us to have a positive real interest? Should we go to 25?
I think it's important to have market rates being positive for Pakistan. How do you produce that does not mean that you produce that through monetary policy. So for Pakistan, the key thing is to do a fiscal consolidation now, which is a huge problem. Again, I'm not being simplistic. It's a huge problem. You had major floods. You need to do stuff about it. But that does not mean you do not have to do a fiscal consolidation. So the key challenge now is how to do this fiscal consolidation. And does you produce the effects that you want on overall pressure on goods and services and on market inflation? How do you do that? You have to really be more and more careful about how you do subsidies and transfers. They need to be very focused on the areas that truly need fiscal transfers. So Pakistan needs to continue tightening fiscal policy. It's quite important. And at the same time, supporting the social side of the agenda. And you can just do that by being very selective. And we can talk about a bunch of structural reforms here. One thing that's quite remarkable to me, quite understandable, but remarkable, is how little some tax bases are tapped in Pakistan. And this needs to change because you do have a need for more revenue mobilization. What do I mean by that? Real estate is not taxed in this country, basically. That's a huge problem. You need to have property taxes in this country. That's not just Pakistan. If you do a chart of developing economies, I mean, real estate is zero in terms of the tax base compared, say, to OECD countries. It is a big problem because real estate is a non-movable asset. So it's a tax base that's quite there, is easy to tax, and is quite progressive if you do right, if you tax bigger properties more than small properties. That's just one example of a type of tax reform that would be quite beneficial to the country. And then use the proceeds targeted to the people that are really suffering, which are the poor. And they are suffering because of the floods, because of the development issues of the country. This is just one example, by the way. I'm sure you have a ton of other examples, and I'm talking as an outsider, just looking at the chart. So you know much better than I do. But I think that's the key to the answer to your question. You need fiscal policy to do more. So monetary policy does not do it.
Marcello, the problem is 75 years old. We've had 23 fund programs. None of them has succeeded. The word fiscal consolidation goes through 25 fund programs over 75 years. So you can see we've never been out of the fund program. And fiscal consolidation is being used a lot. I'm afraid we're never going to do it. And we don't want to do it. And I don't think it's a tax case. It's also the expenditure. Our expenditure side.
Of course, yeah.
If you come with me, I just put this on Twitter today. If you come with me, as I was walking to the World Bank, I was looking at the useless buildings near the World Bank. I can count about 10 useless buildings right near the World Bank. They're all government-owned buildings that are totally useless. So we got a huge amount of expenditures, and we are waiting for Gonzalo to do a public expenditure review. Because I think what we need is a public expenditure review to take place, which World Bank doesn't do. I know Hanad Mukhtar was here doing it in the 1990s, I think, and still hasn't been done. So I think the biggest problem that we have is, and we ask you to please help us do this, we need a public expenditure review before you tax us further. Right now, we are taxed to the hilt. I pay 50% tax on my income. Corporate income tax is 45%. Plus, we pay 50% tax on electricity use. Plus, we pay 40% on this. So we are taxed to the hilt. And again, we are looking to the World Bank to give us a tax simplification research. They've got $400 million. We had a TARP before, but we haven't got a tax simplifications. But I'll open the floor. Go ahead, please. Anybody wants to?
By the way, I agree very much with that. I mean, the efficiency of spending is crucial. Yeah.
Just be mindful that there are people connected, so perhaps it would be
okay. Oh, yeah, there is one, Imtiaz Bhatti. Fair enough. Imtiaz Bhatti, sir, would you like to ask a question?
Yes, sir. you very much. Thank you very much, Mr. Marcello, for an insightful presentation. Since we are talking about reforming the taxation system in this country and improving its fiscal outlook, what is the World Bank's or your opinion, point of view about imposing inheritance tax in developing countries? Inheritance tax is a big reality in advanced countries. And I haven't yet seen any write-up by World Bank researchers regarding this tax. And I have another question regarding setting up a fiscal council to improve fiscal decision-making in developing countries because of the low level of accountability and there are other problems in political economy. A fiscal council would help to impose good policies.
Thank you. So the question for those that didn't hear is about inheritance tax and fiscal council. My answer, yes and yes. I mean, like, again, I gave the example of real estate tax, but anything that improves progressivity of the tax system is quite welcome for Pakistan. And you need to think about tax base that untapped. By using the points that Nadeem made, you can raise some tax and lower others, by the way. That's actually what probably the government should do. They should make the tax system more progressive, focus on tax base that haven't been tapped, and reducing tax in parts that have been overtaxed. So that's from one side. So I think inheritance tax makes a lot of sense. A fiscal council would also be very productive for a country like Pakistan. It's important to have, and this fiscal council should be independent of the government, should have a mandate. So the head of fiscal council should have a mandate, pretty much like we think about independence of the central bank, should think of independence of the fiscal council. And there are different ways to organize a fiscal council. In many countries, the council responds to parliament directly, not to the executive power, which is fine. That's the case, say, in the US. In France, the Cour des Comptes is a bit different, but it also has a similar flavor. It's actually quite different. But anyway, in the US, it's very attached to Congress. There is a new fiscal council in Brazil. And I think these are all good ideas. But again, let me bring back Nadeem's point here. We do need, at the end of the day, development policy and government policy for development is about the quality of spending as well, or mainly about the quality of spending. So all the spending items need to be reviewed and making sure that they are really, that Pakistan is getting the big bang for the buck that is being spent. Thanks.
Asim Said sir.
Okay, sir. Thank you so much. Excellent presentation, very informative. I have a question about, clearly you mentioned, and I agree with you that, what happens with what the Fed does and the global central banks impacts emerging markets in Pakistan. We all are now connected. Now, in the last at least 15 years, we've seen what happened in the financial crisis in 2008. The regulators and the Fed probably got it wrong there. And in the aftermath, we had super low rates and negative in some areas of the world. Again, in your presentation, you mentioned that the Fed has acknowledged that they have gotten it wrong. So my question is that in your career, how many times have you seen the regulator and the Fed go wrong? And what is the confidence level that you have that this time they are getting it right, given the risks that we are seeing right now?
In particular, central bankers get it wrong often because reality is hard to take a grasp. You have to remember what the discussion has been in the US in the past 10 years. It has been basically inflation is quite stubborn, below 2%. And they are trying to bring people back to the labor force, people that have left the labor force during the great financial crisis in 2008 to 2009. So if you look at the data, what has been happening is that unemployment rate has been coming down steadily, but labor force participation for a while in the US was not going up. So the theory behind was, let's overheat this economy, that is going to give an incentive for people to join back the labor force, which is good. I mean, it's going to help the fiscal. It's going to help many aspects of the U.S. economy. And if inflation goes above 2%, that's okay. We are going to be tolerant. And the Fed even changed its monetary policy framework to focus on the average inflation for a set period of time instead of the inflation, say, for the year. So they basically signaled they will be quite tolerant of inflation up to 3% for a while, but they did not expect that inflation would hit 8-9%. So that was the mistake. And the mistake was also a combination between lax monetary policy because of the reason that I said. But then that came on top of it came a major fiscal impulse at the start of the Biden administration. And that created a lot of impulse in the economy. Like I said, I don't think it's complicated to analyze the U.S. economy. It's just an overheated economy. And then you had on top of it, then you had the war, which made oil prices go to the roof and affect gasoline price and all that in the U.S. So then your question is, how can I be secure that now they are right? I think they are doing the right thing. I mean, they see inflation above their target. They're tightening policy to control that. They need to bring economic activity down, bring back to more sustainable levels. So that's how I would answer. I mean, I think monetary policy is right now. Was wrong before. Now, am I right? Let's see what's going to happen 2 years from now.
Great. Thank you, folks. Mahmoud, Khalid, please raise your hand if anybody wants to speak here. Okay, after that, Ahmed.
Sir, thank you very much. An excellent presentation. Very quick question. How do you see the macroeconomic frameworks working along with the development needs of a country? I think there was a joint meeting between the IMF and World Bank also some months ago. So how do you see in the future both of these frameworks coming together in terms of having sustainable growth?
The worst thing that can happen to a developing economy is having a major economic crisis. And and in particular, if it affects the financial sector. So if you look at past episodes, those major crises affect first the level of output, that the economies do not recover the output that was lost during that crisis. And then even if you come back to back to sustainable growth, often that sustainable growth rate is lower because you had a crisis, at least for a long time. So having a consistent macro framework that prevents crisis is a development, is good development strategy as well. So the two are quite linked. So that's why when I say lowering distortions, making sure that, as part of the macro framework, so lowering distortions, fiscal distortions, I think very often you put subsidies on top of subsidies to deal with issues like the price of telephone services are very high and things like that, or the price of energy is high. So you subsidize the consumption of energy. You introduce so many distortions in the economy that that affects, and I would put that in the context of macro, is a bad macro policies, but affects also trend growth. So I'd say having sustainability on the fiscal side and monetary policy done in a way that is manage the cycle the best is fundamental for development and for long-term growth. So I wouldn't create a dichotomy there, as if there were a trade-off between good macro policy and sustainability and sustainable growth. The two go hand in hand. And I do understand, for instance, why, say, the capital accounting in Pakistan is closed and why it's hard to just liberalize the exchange rate market and all that. So I understand perfectly. I mean, many countries face the same issue, but the country should strive to move in that direction it seems to me, by first starting by reducing the fiscal, I would call, inefficiencies. It's hard to do. And I think it's very easy to just say liberalize things. And I know it's not easy. I mean, I was in government before. You need to have a strategy. Start from the beginning, and then you get to the end. It was the beginning the beginning, it seems to me, starts on having a more clear, transparent fiscal policy understood broadly. I mean, thank you.
Thank you. So I have three questions. I mean, first, I think the way that we always in its debates for the last 2 years separates quality of expenditures and the structure of taxation of the contract. I think this basically detracts one from the other, because I think I'm very much for the focus on the quality of expenditures. But I think structure of taxation in Pakistan, I think you alluded to it, but now 8 years in business after the World Bank here, I mean, I can tell you that everything that moves and wants to work with Jews is taxed. And everything that is dead is not taxed, and all the value is still there. So, I mean, that's the easiest way of explaining to the audience what's happening here. So, why is this all the time focused by our ex-alma mater on just revenue increases, knowing that the quality of expenditure, we should tackle both questions and take them head on. So why do we stick with one, revenue? That's first. Second is, I mean, on the interest rate hikes, you made a very good observation about Europe versus US. And, I have been struggling with this, and believe me, I myself thought, well, I don't even think I'm an economist. But the thing is that I lived in this street. I mean, my question is, interest rate hikes in Pakistan against Nadeem only impact the government debt. 80% of what's out there is government paper. That's where the borrowing is. We don't get any money. So it's not like finding my mortgage like the hills or something. I mean, I have to pay cash. So why do we always do that? Should we not start differentiating between economies, which is actually, I think, more important than simply talking about the macro picture? That's the second. And third, actually taking this question forward, I mean, we've had this pandemic, and the lethargy is what I call the human value chain. We've barely recovered from it. And then there is this sanction. And then suddenly we have Ukraine. So all these shocks, essentially, which I call, he alluded to sanctions, inflation, monetary policy. My question is, I want to take it further. Are we seeing, because of all this, while we correct the monetary policy, the advent of decoupling, the advent of change in the currency of trade? Because I see a lot of sides of that. India, for example, has reported its currency. China already is trading in RMB with, I think, half the world. So, just sorry, these are three questions. I thought they flow from each other. Good talk, by the way.
Thank you. Now, on the first question, like I said, quantity of spend is crucial. I agree, and we should do a PR. And by the way, PRs are under me as well. But
We're doing a PR.
Yeah.
Please get it done.
They are doing PR.
Please get it done.
Yeah.
I've been hearing about
So-
it for a long time.
So PRs are quite important. My feeling is you guys know what should be done. In general, often I find that the World Bank reports, first of all, they are excellent. In particular with this team, that's an excellent team, by the way. So excellent. But in general, you know what needs to be done. So the question is, you need to do it. Now, I wouldn't separate it and say, my point on taxation is actually not even on getting more revenues. So I would differentiate myself vis-a-vis other people that have jobs like mine. I'm talking about the quality of taxation in Pakistan. It's exactly because of what you said. I mean, I use real estate as an example because I understand with the way this economy is set up. I mean, real estate is a store of value, basically. So people put money in real estate and can be politically charged to tax real estate. But that would be a way to kind of see if some of this capital goes out of real estate and goes to more productive activities. So you need to reshuffle. You need to increase or institute tax on real estate and reduce taxes on other productive activities, for instance. So it's things like that. You need to reshuffle things. So if price of gasoline goes to the roof, it's okay. I know it's a political problem. You give direct transfers to the poor. That's what you do. And there are ways to break that. You basically tell the people, look, you are going to get $100. I'm saying dollars, but of course it's like local currency. Let's say you're going to get $100 in your checking account. That's it. How am I going to fund this? Oh, I have to stop this subsidy here. So there are political ways to try to, I'm not saying it's easy. I know it's incredibly hard. I've had meetings when I was in government before that if people had weapons, they would have shot me. So I know how it is. But still, I mean, there are things that need to be done. So I think this I'm calling it reshuffling, but a better word is reforming the tax system is important. Then so that's on tax. Then you talked about monetary policy and basically what we call fiscal dominance, which is a big deal. I understand what you're saying, and that's why I think for Pakistan the key here is to get the fiscal in order. I mean, because debt levels are so high, we have this amount of fiscal dominance that when monetary policy needs to tighten, that affects also the public debt. I still think that the interest rate is a lever that the central bank should use, in particular, to deal with the exchange rate depreciations, which affect, for an economy that is so dependent on imported oil and imported food, affect local prices. So it is about that. So to the extent that higher interest rates help stem the currency depreciation, it does have an effect on inflation, and the central bank should continue doing it. Then you had a question about, what was the third question? Yeah, on that. There is a general question that people ask. I think if I were going to simplify a question, you're saying, will the US dollar stop being the biggest reserve currency in the world? That's it. Yeah. Yeah, I definitely, and on the trade sector, I'm quite concerned. I think the world is moving toward, that's what I meant at geopolitics at the beginning, but I'm happy to talk about, is moving to a more fragmented system. You see that even in international meetings. And that is a problem because reshoring, friendshoring, all these are code names for being more inefficient. So people are going to be producing things that they shouldn't produce. They should be imported from other parts of the world, but they are not going to do it because they're afraid that if there's a crisis, they're not going to have access to that particular good or service. So that's a problem because it's going to make things more expensive. Growth in the world is going to go down. So your question about engines of growth, that type of balkanization of trade is going to create more inefficiencies and it's going to basically potential growth in the world is coming down. On the currency side, I think it would be hard. You can have just regional currency effects, but if anything, what I see in this type of world where you may have some jurisdictions that do not abide by freedom of capital movement and all may actually strengthen the power of currencies like the dollar, maybe the euro, because then you are going to use those currencies even more as a safe harbor. But in regional terms, some currencies are going to get more important. But if you are an international investor, if you want to park your money somewhere, I think maybe this balkanization is going to strengthen the role of the dollar, not weaken, because it's going to be the currency that people know that you can go in and out of the US economy. I do. I mean, I have a house in Brazil and so I come here, I take money in and out of my bank account. And, you know, if you have a more international life, that's what you do. So I think the jury is still out on what's the implication for the strength of the currency.
Okay, this is very good. I have a very interesting debate, but I want to go back to the trade. You say inefficiency. I say that the stress that the climate lobby is putting, I mean, you see the carbon dioxide on the ticket per kilogram of passenger weight in plane, ships, marine, everything, and the switch to electric not being very, I mean, I think it's a bubble. So overall, the cost of mobility is going to go up, vis-a-vis cost and all that. So is it not more efficient than going reshore or inshore or, you know, something that we started less people moving, working from home? I mean, the whole change that the world saw COVID. And I wonder why, you know, is it just a human desire to embrace? I mean, what's your take on that? And when I ask the trade question, it's really about some of this would be nudging us to be centered in the and more steady.
Yeah, yeah, I'm not sure. I'm not sure I agree that it's necessarily making us a better human beings, but it's certainly making us more isolated human beings because of all that you said. Look, I go to work by bicycle every day. I mean, I basically do not use my car. I give a huge hard time to my wife that she goes to work by car, and we have a subway beside our house, and the subway is close to her work. So I think there is a silver lining about what's happening. You see that in emissions, in carbon emissions have come down during the crisis and all that. But I would prefer to see solutions for the climate that are based on technological advances and on having just electric engines around and all that. And if there's one silver lining of this horrible, horrible invasion of a country by another one, is that oil prices went up, and there is more of an incentive for people to invest on these cleaner energies and realize that being dependent even on gas, which is a bit less damaging to the environment than oil or coal, is not good. So that's so I agree that there's the way that I hear you saying there is some silver lining about what's happening, and I do agree with that. It would be great if you didn't have Russians and Ukrainians killing each other to get that silver lining. I mean, there are better ways to do. So I don't think COVID was a good thing, basically. But I'm very happy that you're looking at things from the bright side.
Sehan, last question. Go ahead.
Yes, so I want to press more on this very popular left lateral tightening. Yeah. So, but I mean, and this is an argument going on where we say that even the Fed is liable to hide inflationary factors later. I think there was debate, but this is temporary inflation, permanent inflation. But now, in the Western, we're seeing the hot stuff on that. There was saying that the US is lagging. They're saying something might break in financial system behind there. And after 2008, the US had also, the Fed impact also had financial stability mandate. Then when we go to Europe, as Nadeem said, there's a supply shock, and which reflects on the energy price and the energy inflation. The ECB is more careful because sovereign spread over the German bonds are, high, especially for the Italians. In fact, they're undermining their policy in anti-fragmentation. And then you also alluded to how Pakistan or countries like Pakistan are impacting. I'm seeing it through the character of the dynamics of currency appreciation. So let's say, would it help Pakistan to increase its inflation differential over these advanced economies, given that we have a relatively close capital account, and countries like us might have financial account dominated by non-market?
Yeah, it's a hard question. I mean, I understand what you're saying. I mean, the easy answer would be you have to change the structure of this economy, but I know you cannot do that. Maybe you can, I don't know. I mean, it's just a matter of getting a reformist government and begin doing the reforms and not stopping it to get out of the situation that you're saying. Now, having high inflation equilibrium, I mean, inflation has a lot of you're looking at somehow trying to give a good spin, but inflation is a problem. Inflation is distortionary. And in particular, people that have less access to protections against inflation are the ones that suffer the most. So inflation is incredibly regressive. In general, if you have access to financial services and you can protect yourself by investing in your house and all that, you kind of protect yourself somehow. So I would probably look at this issue more through that angle in terms of Pakistan. I would look at inflation as a development issue. And in some countries, you see governments coming in and out, but there's a thread of reforms that stay. Sometimes the reforms get less advanced or more advanced, depending who is in government and all. But it would be great to see, and I get very sad when I hear things like you had 25 IMF programs and you do not do the fiscal adjustment you need to do. But what Pakistan needs is like steady reforms, independently of who is in government. And the reforms should go in the direction of lowering all this system of subsidies and transfers that are not truly helping productivity and the allocation of capital in the economy. You need to, the colleague just said, like, we have, and Nadeem, we have tax to the hilt and you're tax. But, but there is a problem. If you're taxed so much, why do you have such fiscal problems? So it's, I think the way you are transferring money matters. The sectors that are receiving, the sectors that are not receiving matters. So you need to basically redo this and come in government, leaving government, that set of reforms need to continue steadily. And I'd love to see this program. I'm sure the World Bank team can put together a program and say, start here and continue doing this and that, but the government needs to do it. So I think society needs to come to a consensus that those reforms are important, independently of who is in government. If you get to that consensus, I think Pakistan will get out of this. But you need to get that consensus that reforms are important.
The tragedy is we can't get that consensus. Zafar Saab, you want to ask a question or shall we close it?
Actually, I think wisdom of this entire crisis is fiscal consolidation. Because at the one hand, our growth is going to suffer, and on the other hand, because there is enormous pressure on expenditure because of floods and crisis. But on revenue side, last year we had more than 50% of the revenue collected from the import. Now we are following the input compression policy, it means the revenue is going. Then there is a pressure on social production as well. So it means fiscal consolidation will be a big challenge. If in that context, if central bank just increases interest rate as Officer mentioned, about 80% of the holding, bank holding is owned by the government. It means there will be again pressure on the expenditure from debt service. So there is enormous pressure from on expenditure and revenue. So fiscal consolidation might be something. So how you suggest how we can follow fiscal consolidation at the same time not compromise both?
Thank you. I would ask actually the team to answer that. They know the composition of fiscal accounts in Pakistan better than I do. But what I hear here is that there is a lot of inefficiency. So first of all, go after them. I mean, if there is so much inefficiency, I mean, Nadeem is asking for PR. People, some sectors are overtaxed. Just go for it's not easy. I know there's a lot of political problems, but go for fiscal consolidation through unwinding what is inefficient, first of all. And the PR is going to discover what's inefficient. So I'm looking forward to reading the PR. But I would be very surprised if you guys do not know what's inefficient, because you live here and you have been involved in policy discussions. Anyway, maybe you don't, but I'll be surprised. I'll be surprised. No, I'm not ignoring. I think it's fundamental. I just do not know that dynamics. So you need to inform me of the dynamics.
Thank you very much, Marcello. Let me just say very simply, yeah, go ahead.
I wanted to make a point on this fiscal issue. There's an expenditure side. The issues of expenditure is very important. But on the tax side, yes, to add on this, you face extremely high rates of tax on the income. I didn't mention it. But the issue is that you don't collect much tax. So someone is not paying. I can talk through what is happening in what relates to trade tax. So import duties are on average 22%, among the highest. But when you look at effectively collected, they're below 10. So who is getting those exemptions? Part of those exemptions are going to exporters. That's ongoing. And if you go to the way that you're going to get something that's close to 17%, so you still have more than 7 percentage points of gap. That is exemption. Who are getting this exemption? Part of this exemption goes to exporters that makes sense in the international practice. But a big chunk of these exemptions go to to firms that have locally manufactured status and still get away with not paying duties on intermediate input. As a consequence of that, average import duties need to be very high because you need to collect from somewhere. So the issue of who's getting the exemptions, I think this applies not just to the import duties. I know the story with the import duties, but it applies to many others. Very recently, we had the export-oriented sectors and exemptions in place, et cetera, et cetera, et cetera. So there is a common, there is this conventional wisdom of you're heavily taxed, but actually it's only a reduced portion of the country pays. So
And that's what the data show. So if you look at the aggregate data, but what I can see is that some people being extremely taxed, and that's very common in countries because the base is too narrow. Sorry.
Look, we can continue this discussion till the cows come home. We've written about it, Gonzalo. I hope the World Bank would read it. Look, thank you very much, Marcello, for coming here. We live in a country with a closed capital account, a closed current account, and a closed intellectual account. We are a totally closed economy. We know the solution. We know something here. We don't know everything. We know very little about this economy. Whatever we know, we keep to ourselves because nobody listens to us. There's a Dambisi-Mayo thesis that applies here very clearly. We are not the constituency of the government. The constituency of the government are these people sitting here. You are the constituency of the government. It's up to you to push for reform. And you must understand, Gonzalo, whatever tax we collect, where will it go? Whatever tax we collect, it goes into useless projects, useless offices. We've got 113 regulatory agencies in this city, all collecting extra tax. For example, you don't count the tax that they collect in terms of 0.5, 0.1% to 2%, 3% of transactions. There's a huge amount of tax that is collected here. If you apply the Friedman-Haberger issue, we've got a huge amount of tax that is collected off the record through regulations. We've calculated 40% of GDP is calculated through regulations, right? Now, the problem is, unless we address the holistic problem, just looking at taxation puts us into this, collect more. What do? They build more houses for the bureaucrats. They build more houses for the VIPs. They build more palaces. They get more cars. Now we are importing in the middle of a crisis. We are importing $1 billion rupees worth of cars and $4 billion worth of aircrafts for the VIPs to travel around. So we got our roads closed for VIPs, and that's where the expenditure is going. So let's be clear: the problem is not just collecting more taxes. Come with me; I will show you where the taxes go. All these buildings built here near your park, for example, right next to your park. Tell me, what does park do? They collect a huge amount in the budget. So, I mean, I can go on and on, but we have to really, you're doing the PR, so please put this in the PR. What about these buildings in Islamabad? They come through our PSTP money. What about the houses that are made all over the place? So we can collect more taxes. Will it go to productive measures or not? Secondly, the kind of taxation through regulation that we have, the deadweight loss that we have, nobody talks about that. We've got a huge, people now will not invest in this country anymore. Nobody's investing because they're scared. The moment you invest, you get a new mini budget, taxes change, import duties change, everything changes, there's no certainty. Yesterday, the Swiss ambassador was telling me he's got some Swiss investors coming to invest here. But they said immediately, hey, suddenly everything changed, the whole scenario changed, how the hell do we invest here? So we have a deeper governance issue that we have to tackle, and it's not a tax issue. It's the issue that the waste in the government is not identified. Secondly, even on the tax issue, Gonzalo, you've got a $400 million project. You had a $150 million project. Why haven't we simplified taxes yet? I know you guys don't like me to talk like that, but the question is, we want a tax simplification. I bet you, and we've done this, there is a tax policy that will simplify taxes and get you more revenue. Instead, we are complicating taxes all the time. We have tax upon tax upon tax upon tax. Have they ever shown you an electricity bill? No. Please take a look at the electricity bill.
$10,000 is my tax bill for 3 times to walk to the house. And I mean, when you go to get the, I mean, it's just fantabulous. I don't think, and also on the expenditure side, it's same expenditure 3 times. 2001 public since the first subnational done by the World Bank. We were there with MSS and the crew. I mean, the same project done 3 times. I mean, got to do some real expenditure review at the sector level.
And including a regulatory review, because the devil lies in the details of regulation in this country, which are so onerous that nobody can invest. It takes you 1 year of permissions to even set up a pharmacy. Ji, go ahead.
Nadeem, just to say, Marcello's point, you already know the problem. Why don't they get solved? It's a political economy, right?
No, sorry, no. It's a Dumbisi Mayo economy. Have you read Mayo? Please read Dumbisi Mayo. The economy, what she says in Africa is the constituency is not us. Constituency is you guys. You have the responsibility. Wear the cap, wear the hat. Don't have no skin in the game. You've got no skin in the game. We've got skin in the game, but we don't have a seat at the table. How often do you see the finance minister?
Every day. He's a close friend of his. And like,
Right? How often do we see him? Never. Huh? No, Miftah, but I meet him socially. I meet all of them socially, but they will not allow me in the room in terms of policy. Never. Miftah, etc. All no matter. They are all friends, but so they'll meet me socially, but never that. So I think we have to take this political economy. When you mention political economy, that's the political. I know it's bad wisdom to speak like that, but I think we have to learn to be honest and think about it, that the problem in this country needs to better identification and better communication. And I know that you guys love to talk about taxation, but in our analysis, when we got a different opinion, let's argue it out. In our opinion, it's not taxes, it's the expenditures. And
we also like to talk about expenditures,
but
it's just that requires a deep.
Unfortunately, our old agency, right, the fund. Asim was here yesterday. Asim Sen, Asim Sen?
Not personally.
No, you don't. Anyway, he was the deputy director of the Middle Eastern Department. Masood Ahmed was there last week. We've talked about it often enough, but when they go into the office, they also say, I can't talk about it. They're all very good friends, but they can't talk about it. The question is, we all live by mantras. We all live by, whatever, La ilaha illallah, Holy Mother, Father, etc. We believe, and that's an institutional wisdom. The World Bank and the IMF believe is taxation. That's the problem. I have this debate every day with the IMF too. For God's sakes, let's come out of the taxation mantra. It's very convenient to talk taxation. How about expenditures? And we can't talk expenditures. Expenditures are in this country the biggest problem.
But why can't we talk? I mean, for us, expenditure is fundamental as well. Maybe it's lack of information. That's why the PR is important.
That's why I told you. That's why I told you I enjoyed being a res rep more than being a mission chief. Because as a res rep, I learned about the country. As a mission chief, my tongue was tied. I wrote a report and I used to tell my country counterparts, please don't read this report. This is for my bosses. I'm writing this for my bosses, not for you guys. You guys, if you follow this report, you'll fall. And I think that's happening here. We have.
By the way, I was a mission chief in MF. I never did that. But that's okay. That's just different style.
That's fine. Everybody has their own style.
Yeah.
Everybody has their own style.
I always wrote for the people.
Okay.
Couldn't care what my boss said.
Fair enough. I'm not trying to fault you. I'm telling you about myself.
Yeah.
I wrote for my bosses. I did write for the people. And I think majority of us did that. The point is very simple. Let's have this debate between the PIDE, thinking community of Pakistan, and the World Bank. The government won't talk to it. Let's have this debate. Is it expenditures or is it taxation?
Both.
Yeah, I was going to say.
No. Don't shortchange it. It's not both. Sorry. For 60 years, I can go through all your accounts. You've had a TRP, right? Did your TRP succeed? Tax Administration Reform Program?
We have a ongoing PRR as well.
You have another one, right?
Yes.
So the World Bank is the only organization that can double its bet. When you lose a bet, you double your bet. Only gamblers do that. So here, in fact, I was in the planning commission when you guys tried to do that PRR, and I stopped it. I said, no, please, let's not do it because you're doubling your bet. You lost once, you're doing another one. Now tell me what's happening with PRR. Where is your taxation reform? I don't see any taxation reform.
So, well, I mean, I think this is, look, I think these are very valid questions, but I think that, if you look at the IMF program at the moment, the core of the structural reforms is on the expenditure side. It's saying move away from the energy subsidies. Yes.
Have you seen our comment on the IMF reform?
But
IMF paper, have you seen our comment?
And if you
look at comment, please leke aaye inko dein. Our commentary, and we've written a 20-page commentary on the IMF program, right? And we don't agree at all. I think the IMF, when I asked them, for example, and I've asked this in Masood's room, the director's room, I've asked it, what about the energy reform? This is 2012. Masood tells me the World Bank will do it. He points the fingers at you. So does, what's the guy's name? The Lebanese guy. So does he points finger at your side. He says the World Bank will do the energy reform. So where's the energy reform?
So, I mean, we have an ongoing PPC targeting some energy reforms. And
For
the
the last
question is,
20 years, we've had, Marcello, we've had a deficit in the energy sector. We have spent about, I think if I remember right, maybe 20% of GDP on the energy sector in the last 15 years. The reform is ongoing and it's still increasing. So where's the reform?
No, I mean,
And what the-
I should apply for the, because I didn't know the World Bank had so much power.
and the
Right.
and the
That's a
IMF
job to have.
and Marcello, no, I agree with you. Please come and see. And the IMF solution IMF solution is to raise prices. So now we have the highest prices in Asia on energy. And the IMF tells me very simply, and it's in the report too, that you can't do the energy reform, so please keep raising the prices. Because the World Bank is going to do the energy reform, but you can't do it, so we'll raise the price. So where do we have this conversation? All I'm trying to do is have a conversation.
No.
Where is this conversation?
No, my point is not that. No, the conversation is here now. I agree with you. We should
Please.
have the conversation.
Yeah.
But I mean, the actual actions, I'm surprised that you're saying you haven't done the reform. I don't think these guys can do reform. They can write reports and put pressure on the government. But ultimately, the World Bank does not do the reforms. Actually, that's a general point that I made many times with my colleagues. Once I was in a meeting and one of my colleagues, Robert, said, no, because as policymakers, no, I'm sorry, you're not a policymaker. You advise governments, you lend to governments, policymakers are people that are in government doing policy. Those are policymakers. So at the end of the day, it is for the Pakistanis people to do the reforms. And the people are represented in the government. If the government does not do what the people want, then I don't know. I mean, then there is a political economy issue. That's how governments come and go. But at the end of the day, it's your country, it's not my country. So that's the point. So what I'm saying is that
We agree on that.
we have to do the best we can, and you have to continue doing the reports. And I agree, you should keep putting pressure on these guys to do the best. I keep pointing to him. It's because there is a, you need to keep putting pressure, and this debate needs to happen here for sure. But at the end of the day, it's your country. I mean, it's like I can't.
Thank you very much. Thank you, Marcello. Thank you, folks. It's a great discussion. We'll continue it some other day. All the best, Marcello. Enjoy Pakistan. Thank you, folks. Thank you very
Thanks
much.
so much.